To remain updated with the latest business news, click on the bell icon.
I would like to say that India is revolutionized in the area of digital payments and the digital systems. In many ways, we are leapfrogging way ahead of many developed countries. And I do believe that our UPI payments systems, as well as our Aadhaar unique identity basis for transactions, is a world innovation. And I would love to see how we can export it globally. Frankly, it can be used even in developed countries, but certainly in countries which are developing. And I would strongly encourage building bridges using these two systems to make India a global financial technology and digital player. And I would love to see how these protocols can be built between different countries and different regulators. I think Singapore has made some initial beginning on this, but I think it is even more important for developing countries, whether it's a Bangladesh, whether it is many countries in Africa, other countries as well. India must move fast to give this technology and leapfrog inclusion. I think Prime Minister in the morning made a wonderful point on inclusion and gave the 4 I's. I think it is consistent with that to make the world more inclusive, of course, in addition to making India more inclusive. Having said that, I think what we also have to keep in mind that is along with the development of the payments technology, we have to be clear that there is a viral growth which happens. And here I must comment that Indian banks have been behind the curve. Indian banks have allowed the growth of UPI payments, and essentially they've been monopolized by 2 players, Google Pay and Phone Pay, and they have got 85% market share while Indian banks saw it happen in front of them. Therefore, it's wake-up call for Indian banking. Wake up, or you will see large parts of the traditional financial markets move out. Of course, there's a counter question from Tamal, which is from a policy and a financial stability point of view, which policymakers will also have to look at. I think 2 points. First of all, bankers were short-sighted over the last 3 years. Their standard response was, oh, there is no money in payments. And they let the payments market effectively be taken over by these 2 or 3 companies. Having said that, I think we have to keep in mind consumer tech companies have revenue models which are outside finance. For example, the advertising model, or for example, the e-commerce model. Banks by law, under Section 6 of the Banking Regulation Act, cannot get into non-financial businesses as defined. Therefore, there are serious issues about how you're going to draw the lines. And simultaneously, there's an issue about financial stability. I was reading an article which said that when you put a regulated entity into competition with a fintech or a consumer tech, the standard approach of the consumer tech is fast and loose on regulation, and they gain market share at great speed. I'm not against competition. All that I'm saying is we need to make sure that in the name of better competitive service, we don't have a systemic and a stability challenge at the same time. The risk of who is raising the deposit. Is it the consumer tech company, which is the apparent front engine, which is going to the customers and marketing deposits? And who runs the risk of the underlying asset? So we need to make sure that as we go for fintech and grow it, we must also be clear that we do not betray trust. The Prime Minister this morning mentioned the most important aspect of the digital growth is consumer trust. That has to be protected at all costs.
If you like the video, do like, comment, share and subscribe.